Hey everyone, Les here from BG Trading. Hope you are well. Today is June 30th, 2022, and I'll be analyzing Hawsons Ion, which the SX code is HIO. This is a stock that one of our members from our free Facebook community, Buy, Grow, Sell Strategy for Share Traders, have requested us to analyze. So every week or every couple of weeks, we do open for our members to come up with a list of stocks they believe could have a good potential, and then we look into them, and the most interested ones we take and we start analyzing, and potentially we even trade those stocks. So if you want to become part of this community, just jump on the Facebook, Buy, Grow, Sell Strategy for Share Traders. Is free of charge. Also want to remind you, this is a last day of a financial year. We are running a really good end of financial year offer for anyone that want to become actually VIP member, and for VIP members existent as well, discount, because we look after people that are trading with us over the long term as well. We want to make sure we look after all our existing members for sure. So I'm opening up my analysis that I just put together today. So for us, I'm just going to go a little bit different today. So before, because a lot of people watch videos just halfway, say, for us, the sentiment of this stock is bullish despite the bear market. However, you got to make sure you enter the right time. So massive pullbacks are very common in small caps like this. It is a speculative stock still. In industries, iron ore and the sector materials. So why it is speculative? Because it is a company that is currently developing its iron ore project. Companies that are not yet generating revenue, they are highly speculative, because we don't know whether they will actually deliver the project despite all the advancement into the project. So until they actually start generating a solid revenue from its product, it is and going to be always be speculative trades. Keep that in mind. So, but this particular company has shifted from explorer to developer. So it's still explorer and developer. So, but this shift has given the stock price a really good run. In fact, the stock price went up over 400% in a matter of 12 months. And then obviously now the stock price has consolidated around, this is my dog, guys, by the way. The stock price has consolidated after this the market digesting the development phase information, and then obviously now has bottomed up around 40 cents and is just trading around 50 cents. So I'm going to cover the technical part of this stock very shortly, so stay with us. So now, why this is a very interesting project? Because Hawsons is unlike other like Fortescue, for example, or BHP or Rio, they currently produce average and low grade sort of iron ore. This company has on the pipeline the production of very high, what they call ultra pure iron ore. So super grade iron ore. Sorry, they call super grade iron ore. So because it's over 70% of purity, where other grades of iron ore, such as Fortescue, is currently ranging between 56 to 59, Rio 58 to 69. So Rio is not too bad, though. And BHP just above 60. They actually working at the moment to improve that, but it's just working around 60% purity, where Hawsons super grade iron ore is 70% or above, which gives the company not just a competitive advantage over other iron ore players, because it's been sitting in a different mineral, and it has a higher margin product, but also because we all talking about net zero emission and world decarbonization. And this company, since it is sitting in different sort of a mineral than hard rock magnetite mines, this mine consumes a lot lower energy, power and water to actually process its output. So therefore, putting Hawsons in a whole new level in terms of net emissions compared to other companies. In fact, the company targeted to go zero net emissions within these next few years. Whether it's going to be delivered, we don't know. That's what we call speculative. But the proposition here is really, really compelling. And that's why we are so interested on that particular company. Now, obviously, like any other iron ore stock, it is exposed to iron ore price fluctuation. So if your iron ore price goes well, then this stock going to go well as well. And if iron ore goes badly, goes south, then obviously it's likely to underperform. We've seen in the past junior companies doing one or two production of iron ore, then iron ore price goes down, and then they had to actually stop its production. And then we don't want to be holding stocks like this, right? Not at all. So this is just a little bit of comparison of iron ore price in the market. For example, this is obviously come back from the BFS. Company BFS. Basically, what they're saying here is that the price of high quality iron ore is way above the other ones. So, like 58% grade iron ore would be paying at the time of this survey would be paying $115 a ton. While this high grade, super grade iron ore would be getting 189%, according to CFR North China Spot Iron Ore prices. So it's really interesting because the company has competitive advantage from the cost of production, also from the environment perspective as well. And then obviously is Australian based project. You all know, if you've been following us, that we love Australian based project. Another highlight here for us of this particular company is that like any iron ore producer, there is a favorable macroeconomic for steel, despite this potential global recession. For the simple reason, mostly everything uses iron ore somehow. When I'm talking iron ore, is the output. You need to manufacture factories. You need to produce the product. To do that, you need to build a pilot plants and so on. All uses quite a lot of steel. What else I want to cover in this that is extremely important is I already mentioned that 100% owned project by the company since March 24. This is, for me, is a big tick. There are a lot of companies out there. They are in joint venture and they only own like a certain percentage in order to make the project viable. This company owns 100% of the project, which is exactly what we want to be at if we invest into a particular project. So first production is target for second half of 2024. So 24 months or 2 years away from now. Still a lot of things can go wrong with this project, especially facts like external facts like weather, as the company has actually been facing a little bit of weather challenge later, as we've been in a very, very wet year due La Nina. So If that keeps on going, that could well push the production to 2025. And then obviously if investors have these expectations of having the first shipment by 2024, then there could be a downside for the stock price. So the company time frame, as you can see here, just gonna increase the zoom. So obviously, mid of 2022, we'll be providing the market with mineral resources upgrade update, as the company is still drilling, for more results. Demonstration. This is where I'm like. This is what I like to see here. And that's why I'm interested in this particular company as we speak, because they are about delivering its demonstration and processing testing plan. And we all know this is a critical milling stone for any company that wants to start working on offtake agreements and commercial agreements with partners. So the full bankable feasibility study also at the end of 2022, environmental approvals for both New South Wales and South Australia. By the way, this project is sitting just in between, as you can see here, between sort of New South Wales and South Australia, close to Broken Hill, and it is logistically well placed, close to highways, 60 k's from the nearest town, where a lot of the workers, there's a lot of workers living in this town. Guys, let's jump into the stock itself. Just have understanding. The stock jumped 400% all the way from like 10 cents to over $1. Over $1. So there was a very good rally, and then now it's just sitting between at 50 cents. Obviously, we had a downturn on iron ore price. We have a bear market. So this all contributing for this downturn on the stock price, and obviously as well, although a lot of managed funds and analysts come up with a stock valuation of $2 or $3. As I always say, the true valuation is what is reflected on the stock price at the moment. And obviously, according to our strategy, the stock price is no longer the FOMO area. So remember, we never want to buy the stock when it is a FOMO area. If you don't remember what FOMO area is, at BG Trading Strategy, FOMO area is anywhere above the red line, above the SMA 40 for the stocks that are bullish. So at the moment, it's sitting right under the SMA at what we call a technically fair price. So ideally, we want to buy any stock at technically discounted price. Technically discounted price for us is when a bullish stock that has a great growth potential is trading at 10% or under the SMA, the red line. So if you, before you ask me, if you don't know yet, SMA, we use 40 days period for SMA, okay, for the red line. And then we also use as a reference the 250 days simple moving average as well. So we have a fairly good idea whether the stock is super cheap or not. So a lot of stocks at the moment trading actually under the SMA 250. So very interesting time in the market. Things are on sale despite the short-term doom macroeconomic environment. Now what we have here was about 53% correction on the stock price, and then we have a bullish intersection level 1, level 2 here, where the candle crosses the yellow line, and then the candles, by the candles trading above the yellow line, we're in pretty safe territory. So what we don't want to be holding the stock is when the candle crosses back the yellow line and is actually start trading under, and that's when we have the bearish mode here for the stock. But now we had a reversal confirmed here, right? Obviously, this red little candle here doesn't give us a 100% confidence the market is bearish. There's a strong volume to the downside. So just anyone that's entering in this stock now have to be mindful that we might see HIO at 40 cents again. And ideally, what we want to do is set a stop loss. If you buy at the 40 cents, when you set a stop loss just under around 38 cents, because if it goes further, it could go all the way south to 20 cents or lower. We don't even know. Remember, this is a company that is still not producing anything, so it's still at the speculative classification for us, and hence posing extremely high risk for any investor. Okay, very high risk stock, but when there is high risk, there is great reward. Guys, trade safely. This is my analysis for Hawsons Ion. Great potential for this company. I think 50 cents is still, we could be paying 40 cents for this stock. And I probably will be waiting a little bit more to see how this market goes, especially because in about a couple of weeks, we have the next Fed meeting. And we all know the market will freak out by middle of, by the week that precedes the next Fed meeting. So you got to be mindful that after 8th of July, we might have a ugly week again just before the next Fed meeting. Market will get an easy volatility index is likely to go high again, and ideally we want to be holding a reduced positions of most of the stocks and potentially even shorting the market. Thank you very much. Remember, again, our end of financial year promotion. If you want to get involved with BG Trading, that's your chance. I'll see you in the next video. Bye. The whole idea when we designed BG Trading BGS20 strategy was to use only a set number of indicators to make it simple and clear to understand and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.